Good morning and welcome to Earnings Echo. While my bosses were asleep, we put together the most important information about Amazon.
Let's get right to it. The headline numbers for Q4 2025 were pretty strong on the surface.
Strong is one word for it. What are we talking about exactly?
Net sales hit $213.4 billion. That's up 14% year over year, and it beats the consensus estimate, which was around $211 billion.
So a solid beat on the top line. But I saw the stock tanked in after hours.
It did. It dropped about 10, maybe 11%.
So what happened? Was it the earnings?
Well, the earnings per share came in at $1.95. The street wanted $1.97.
A 2-cent miss. You're not telling me the stock dropped 10% over 2 pennies.
No, absolutely not. The real shock came from the guidance. Q1 operating income guidance is set between 16.5 and 21.5 billion. Analysts were looking for something north of 22 billion.
Okay, so a guidance miss. But even that doesn't feel like a 10% drop kind of story. This feels like something bigger.
It is. This is all about what I'd call a future shock. It's not about Q4 sales. It's about the massive, massive increase in spending they're planning for 2026.
Let's get into those drivers then. The core business must be doing okay to even consider a big spend, right?
The engine is humming. AWS growth actually accelerated. It's up 24% year over year.
Wow, for a business that size, acceleration is huge.
It is. It's now a $142 billion annualized run rate business. And advertising is also on fire, up 22% to $21.3 billion.
So the money makers are making money. But the operating income, you said, was a bit soft.
Right, because it was weighed down by about $2.4 billion in special charges, things like tax disputes in Italy and asset impairments for their physical stores.
So they're writing stuff off. But let's go back to that future shock. You're talking about capital expenditures, CapEx.
Exactly. This is the real story. Free cash flow just plummeted. It's down 71% year over year to $11.2 billion.
71%. Where is all that cash going?
It's going into property and equipment. Amazon just signaled that they expect to invest around $200 billion in CapEx in 2026.
$200 billion. Wait a minute. The market was expecting, what, 145? 150 billion?
That's right. So they've just dropped a $50 billion surprise on investors. And that is why the stock got crushed.
I mean, with that $50 billion difference, you could buy a major company. So how did the CEO, Andy Jassy, frame this on the call? How do you sell a $200 billion spending spree?
He didn't flinch. He framed this as a seminal opportunity. He's talking about a huge push into AI, their custom chips, and even their satellite project, Project Leo.
A seminal opportunity. That's a big phrase.
It is. And he used a very specific metaphor. He compared pre-training these large AI models to teaching a child a language when they're very young.
Okay, I'm listening.
His point was that if you don't do it early, it's much, much harder to gain fluency later on. The argument is, essentially, we have to spend this now, or we lose the future of AI.
So it's an arms race, and they're trying to build an insurmountable lead. That makes some sense, but they have to pay for it somehow.
They are, and that's where the other numbers come in. Remember those asset impairments? They're closing physical Amazon Fresh and Go locations to focus on what they call quick commerce and Amazon Now.
Getting out of the physical grocery game to fund the AI game.
Precisely. And they're doubling down on their own hardware. The chips business, that's Trainium and Graviton, has already hit a $10 billion annual revenue run rate with, they claim, triple-digit growth.
So if we pull all of this together, what's the big picture here, the echo for investors?
I think the investment story for Amazon has just fundamentally changed. They are explicitly trading short-term free cash flow for, they hope, long-term AI infrastructure dominance.
A massive gamble.
It is. That $200 billion shock seriously increases the risk profile, but the goal is to build a technical leadership position that is simply unassailable. They are betting the farm to own the future.
A huge high-stakes bet. It makes you wonder, if $200 billion is now the price of admission to compete at the highest level of AI, who else can even afford to play?
That is the question, isn't it?
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.